Hello CA Inter students. Let's revise Accounting Standard 24. The standard is in module number 1. It's a presentation and disclosure standard. Very easy standard. Full theory standard. And it won't take much time. Let's do it in maybe 20 minutes. So let's get into this. See, as a student, before studying any accounting standard, it is very important to understand why I am doing the standard. Why AS24? Don't say it's because it's in my syllabus. No. Is it practically? You are a professional student. So practically, what is the importance of AS24? Say for example, if a company is dealing in food business and textile business. Say for example, a company is into food industry and food business and textile business. And in this food business, they are doing, say for example, processed food, ready to eat food, ready to cook food, beverages, confectionaries, so many items, so many different product lines they have. And textile also, they have kids wear, saris, men's wear, western, traditional, so many different product lines. Okay, fine. Now, I'm the shareholder of this company, and first year 300 crores is the profits from this business. So I'm so happy, I'm excited because my company is doing really well and the profit is 300 crores. But what happens in the next year? Next year the profit has reduced to 120 crores. So it's really a matter of concern, and I have read in the notes to accounts that this textile division has stopped. Okay, so and I came to know that the discussions, the negotiation or this discontinuation process has started from the previous year. So the shareholder should have been informed about the discontinuation in the previous year itself. Why? The shareholder would have taken informed decisions, like he would have sold the shares. So it's not fair to inform the shareholder that we have stopped, we have discontinued the business. What the standard talks about is you have to disclose the information of, come on, say with me, discontinuing operation. Not discontinued, you have to disclose the information of discontinuing operation. And what are the disclosures to be made? That is what we are discussing in the standard. So it's very important or relevant for a shareholder to identify that how much of the profits is stable. How much of the profits is stable? Meaning out of the total profits, some profits are not stable because it is from some business which is going to stop in future. So it's important for me to identify how much profits are stable and how much profits are not stable. How much cash flows are going to discontinue in future. How much EPS is going to discontinue in future. So this is the background of AS24. Now don't waste time. Let's quickly get into this. So what should I study? You need to study this 1, 2, 3, 4, 5 points. 1, 2, 3, 4, 5 areas. The type of question which you are going to get is a situation will be given. You need to identify whether it is a discontinuing operation or not. And if it is a discontinuing operation, write the disclosure requirements. Okay, so it's very easy, guys. Come on, what are discontinuing operation? So you need to have a grip over the language or the theory explained in AS24. So what are discontinuing operations? Come on, study. Discontinuing operations are major line of business or major geographical location which is operationally and financially distinguishable. Major line of business. So If food division is stopping, it was a major line of business. If textile business was stopping, it's a major line of business. No, I have only food division, but we have a business here in Kerala and in Delhi. And Kerala division we are stopping. It's a major geographical location we are stopping. So, major line of business, major geographical location which is operationally and financially distinguishable from the other is discontinuing. Plus, so this line you have studied. Plus, disposal of assets in its entirety. Disposal of assets is a must. So if you are stopping this food division or textile division, what are you going to do with the assets which you have already employed for that division? I'm continuing to use it. Then it is not discontinuing operation. To consider as a discontinuing operation, you should dispose the assets. Dispose the assets in its entirety, 100% disposal, or piecemeal disposal. What do you mean by piecemeal disposal? Part by part, piecemeal, gradually you will be disposing it, but you're not using it. Or abandonment of assets. So, major line of business, geographical location which is operationally and financially distinguishable is discontinuing, and disposal of assets in its entirety, piecemeal disposal or abandonment of assets. Then the standard says this is what discontinuing operation. If you get a question on discontinuing operation, please do write these 2 points. Please do write these 2 points. Plus, when should I start disclosure? There should be a single formal plan by board of directors. Board of directors have decided to discontinue. There's a formal plan of discontinuation by board of directors followed by initial disclosure event. What is that? Initial disclosure event, I don't know. What is IDE? Initial disclosure event. Okay. That we'll study. Approval and announcement of plan by board of directors. Approval and announcement. Board of directors approved and announced, made it public. So what is that date? Approval and announcement. Then you should check what is the date of binding sale agreement. I didn't understand what is this. So food division, you are stopping. So all these assets and liabilities, you say for example, you have agreed to sell to another party. What is the date of that agreement with the buyer? On which date you have entered into the agreement with the buyer to sell this? So take these 2 dates, whichever is earlier, that date is called as initial disclosure event date. That date is in which year? That year onwards, discontinuing operation disclosure will arise. AS24 will attract. We can say like that. Did you get that? So 3 points. Major line of business. Okay, that you need not repeat. There is disposal of assets in its entirety or piecemeal basis or abandonment of assets. And there is a single formal plan by board of directors followed by initial disclosure event. So if these 3 points are there, AS24 gets attracted. The provisions of AS24 will be applicable. Okay, fine. Now, what are discontinuing operations? 3 points. Disclosure will arise when there are 3 points. What is IDE? IDE is 2 dates I need to consider. Of that 2 dates, whichever is earlier is IDE. And what are not discontinuing operations? Let's remember it as 4 points. What are not discontinuing operations? What are not discontinuing operations? These are given as examples of examples which are not discontinuing operations. What are those? 1. Gradual or evolutionary phasing out of a product line or class of service. Slowly one product line is disappeared. What is a product line? Say I said there is a food business. In that food business, ready to eat, ready to cook, processed food, other items, other groceries, etc., etc. So one, say for example, ready to cook, some, see that we are closing. So will that, so under this food business, One product line we stopped. Gradually, we have stopped one product line. Will it constitute discontinuing operation? No, you should say major business. Entire food business should stop. Then only we can say it as a discontinuing operation. Just closing one product line cannot be considered. So first one is gradual or evolutionary phasing out of a product line or class of service. And the second one is discontinuing even if abruptly several products within an ongoing line of business. In a main line of business, several products are stopped. Still, it is not discontinuing operation. Not discontinuing operation. So it's not because it is gradual, it is abrupt. It's not business we are closing. Some products or product lines we are closing. Okay. Now shifting of some production or marketing activities. Say shifting the location. One location to another. Production and marketing. Shifting is not discontinuing operation. Because shifting means, are you closing one major geographical location? You are closing, but you are starting again. You are shifting, reopening. So there is no disposal of assets, or you are continuing that business. And closing a facility to achieve productivity improvements or cost savings. It's for the betterment of, and again, just find if there is a business closing here, a facility you are closing, maybe a process you are closing to get productivity, to achieve productivity improvements or cost savings. All this cannot be considered as discontinuing operation. So is it important to study the theory? Very important. Okay, so what are discontinuing operations? What is initial disclosure event? What are not discontinuing operations? And what are the disclosures to be made if there is a discontinuing operation? 7 disclosures. You should remember it as 7 disclosures. 4 theoretical disclosure and 3 just numerical disclosures. 4 theoretical disclosures. Initial disclosure, first disclosure after. So disclosure, presentation and disclosure. First disclosure after initial disclosure event, description of discontinued operation. That is which segment, which business you are discontinuing. Is it a business or a location? Business or geographical segment which it is reported as per AS 17. What is the date and nature of IDE? Is it approval and announcement date or date of binding sale agreement? What is the expected timing of completion of this discontinuance? If you start discontinuing now, it is not compulsory that you will be able to discontinue within a year. It may take years. So what is the expected date of completion of discontinuance? This is what I said, 4 theoretical. Very easy. Description of discontinued operation, business or geographical, what is the IDE and what is the nature of IDE and timing of expected discontinuance. Okay. Completion of discontinuance. Now 3 numerical. What are those? What are the carrying amounts of assets and liabilities? Naturally net worth of discontinuing operation. How much revenue it earned in the current year? What are the expenses? Oh, easy. And what is the amount of pre-tax profits and losses and tax expense? Revenue, expense, pre-tax profit, tax expense. Very easy to understand. Okay. So this is the first year. Say for example, guys, please listen. 20th March 2023, Board of Directors approved to discontinue. 20th March 2024, there is a binding sale agreement. And 20th March 2025, everything is happening on 20th March. 20th March is a special day. Okay, date. 20th March 2025, announced that we are selling. So in which year onwards you should start disclosure? 23, 24 or 25? So I can hear you all saying 31st March 2024 because here only approval, there is no announcement. So binding sale agreement is on 20th March 2024. So that financial year ending 31st March 2024, you have to make the 7 disclosures. Okay, fine. Now next year if it is still not closed, then what are the assets and liabilities you sold and how much profit or loss? Amount of gain or loss recognized in the disposal of asset or settlement of liabilities, and what is the income tax effects? Then what is the net selling price from, say there are 100 assets, of which 60 assets you have sold. So what is the gain or loss from this assets and settlement of liabilities? What is the expected selling price of other 40 assets? If liabilities are there, net of liabilities, how much amount you are expecting to receive? That's it. And update the disclosures. Continue. You should continue till it is complete. Discontinuation is complete. Till that date, you have to continue with the disclosure. You have to continue with the disclosure. Okay, fine, understood. Now, what if there is a change in plan? You decided not to discontinue. What are the disclosures to be made? Fact. It's not there in the note. These are the disclosures to be made. Fact. What fact? That we decided not to discontinue. Okay. Then reason. What is the reason for the change? Financial effect. Fact, reason, financial effect has to be disclosed. That's it. That's with the theory. We have finished the theory. Great. Then what are the questions? See, first. So let's do the MCQs also. AB decided to dispose of its clothing division as part of its long-term strategy. Okay. Date of board approval 1st March. Date of formal announcement 15th March. Date of binding sale agreement 1st July. Reporting date 31st March 11. The date of IDE approval and announcement by 15th March. Date of binding sale agreement 1st July. So what is the IDE? 15th March 2011. Of course, reporting date 31st March 11 only will make the disclosure. But IDE date is 15th March. Option B. Okay. Then to qualify as a component that can be distinguished operationally and for financial reporting purpose, the conditions to be met are: the operating assets and liabilities of the component can be directly attributed to it. How can you say one business is distinguishable? It's having its own set of assets and liabilities. It has its own revenue and its own expenses. Then it is distinguishable. So the operating assets and liabilities of component can be directly attributed to it. Revenue can be directly attributed. At least majority of the operating expenses can be directly attributed to it. All of the above. All of the above. All of the above. Okay, fine. Identify which of the following statements is correct. A discontinuing operation is a component of an enterprise that represents a major line of business. Yes. Discontinuing operation is a component of an enterprise that can be distinguished operationally and for financial reporting purpose. Discontinuing operation is a component of an enterprise that may or may not be distinguished operationally and for financial reporting purpose. A discontinuing operation may be disposed of in its entirety or piecemeal, but always pursuant to an overall plan to discontinue the entire component, which is incorrect. C, right? C. Again, identify the incorrect statement. discontinuing operations are infrequent events. But that doesn't mean that all infrequent events are discontinuing operations. I used to say this is like our Santosh Pandit's dialogue. Discontinuing operations are infrequent events, but all infrequent events are not discontinuing operation. Okay. The fact that that's actually correct. That's a correct statement. The fact that a disposal of a component of an enterprise is classified as discontinuing operation under AS24 would always raise a question regarding the enterprise's ability to continue as a going concern. Come on guys, when you dispose, always there will be a question how this enterprise is going to continue as a going concern. Everything is gone. Will such a question arise? For recognizing and measuring the effect of discontinuing operations, AS24 does not provide any guidelines, but for the purpose, the relevant accounting standards should be referred. How to account for fixed assets of a discontinuing operation? Is AS24 giving you an accounting treatment? How to account for, how to do this revenue recognition of discontinuing operation? No. AS24 is talking only about its disclosure. So for that recognizing, measuring the effect, you have to refer other standards. Correct. The enterprise shall include a description of discontinuing operations in the financial statements, beginning with the financial statements for the period in which IDE occurs. Pakka, correct. So what is the incorrect statement? B. If you discontinue an operation, there will not be a question how this business will continue. That's not correct. Theory questions I'm not purposefully reading. This has been already covered. Practical question. This question has come for exam. Rohini Limited is in the business of manufacture of passenger cars and commercial vehicles. The company is working on a strategic plan to close the production of passenger cars and to produce only commercial vehicles over coming 5 years. So company is having a strategy to close passenger cars and produce only commercial vehicles for next 5 years. However, no specific plan has been drawn up for sale, neither the division nor its assets. Company is working on a plan. No plan has been made. As part of its prospective plan, it will reduce the production of passenger cars by 20% annually. It also plans to establish another new factory for the manufacture of commercial vehicles and transfer surplus employees in a phased manner. Okay. So over a period of 5 years, 20%, that passenger cars will be reduced and we'll start a new factory for commercial vehicles and employees will be shifted maybe from passenger to commercial vehicle division. You're required to comment if mere gradual phasing out in itself can be considered as discontinuing operation. If the company passes a resolution to sell some of the assets in passenger car division and also to transfer few other assets to passenger car division to the new factory, does this trigger the application of AS24? Would your answer to 2 be different if the company resolves to sell the assets of passenger car division in a phased but time-bound manner? So everything. So I'm not. See, you understood the situation. So there is a company which was doing passenger car and commercial vehicles, and you are planning to stop in 5 years, but no specific plan, and you have plans to continue this commercial car division. So first question is, if mere gradual phasing out in itself can be considered as, no, it cannot be considered as discontinuing operation. To constitute as discontinuing operation, it should be major line of business. That we can accept. Maybe passenger car division is a major line of business. Okay. Now disposal of assets in its entirety, piecemeal, no information is given regarding that. So mere gradual phasing out cannot be considered as discontinuing operation. Okay. If the company passes a resolution to sell some assets, they decided to sell some assets to some assets of passenger car division and transfer few other assets. Does this trigger? But still 100% assets sold. Some assets will be sold, some and other few assets will be transferred to passenger car division. They are not telling when it will be closed. Now still, is there a plan? They have a resolution. But are they talking about closing of passenger car division by selling 100% of assets in a time bound manner? No. So some assets will be sold, some assets will be transferred. But will that constitute 100%? It's not clear. So AS24 cannot be applied. So you should write major line of business, disposal of assets in its entirety or piecemeal disposal or abandonment of assets. It's not correct to use that assets in the other, meaning by the entity itself. It's not correct. Would your answer be different if company resolves to sell the assets in a phased but time-bound manner? Yes. Piecemeal disposal is enough. Major line of business, piecemeal disposal. And if there is resolves, means resolution is passed. Which means there is board of directors, single formal plan. AS24 will be attracted. Did you get that? You can go through the answer, but that's it. So this is what AS24. I hope it's clear. So let's meet with another video. Thank you.